everybody. Welcome back to another episode of Random Gleanings. Jesse, we're going to talk about the Magnificent Seven today, right? And then everybody else?
And everybody else. That's right.
So let's start with this first chart. This is net income for 2023 into 2024 for the seven Magnificent Seven companies: Apple, Amazon, NVIDIA, Microsoft, Tesla, Google, and what, Netflix? Is that right?
Yep.
And then everybody else. So, I mean, you can see net income during this time period where interest rate increases really have begun to settle into the economy in 2023, beginning of 2024. I mean, net income's down a little for the S&P.
Which is what you would expect to see in a tightening regime.
I mean, it really is.
Yep.
And so what you have had here is seven companies ostensibly kind of defying gravity.
Bingo. Yeah.
A little bit. In fact, if you look, the green line at the bottom is the S&P 493. And I mean, that implies basically the net income for those 493, that net income shrunk 6% on average.
Yeah. And we'll get back to the S&P 600 and explain that here in a minute. But yeah, I mean, on average, the S&P 500, even including those big boys, is still down in over the last year. And yet those seven have just really defied gravity, as you said.
Yep. So here, the next chart is the equal weight S&P 500. So every company is essentially 1/500th in this chart. Hadn't made it back to all-time highs.
It is not. Yep. And that, I mean, again, I think the prior chart starts to explain why
it hadn't.
Why it hasn't. That's exactly right.
Okay. So Lizzie and Saunders shared year-to-date performance ranking of those Magnificent Seven. NVIDIA, number one. Meta, number three. Amazon, 26. Microsoft, Google kind of down there a little bit. Apple solidly below the 50th percentile, and Tesla's in dead last.
That's, I mean, again, and they were one of the meteoric stocks over the last few years that have not performed year to date.
So here's what worries me, right? And I'm not saying get negative. Look, I mean, we're largely positive, but I mean, sure, there are still some things that are a little bit concerning. The narrowing of the seven even that have led this thing and pulled it up is kind of concerning. This next chart, to me, I mean, Apple, Tesla, Google kind of rolling over, as you ratchet expectations, right, for earnings, ultimately, I mean, your earnings can be higher and you disappoint.
I mean, the analogy I think of is you hear about somebody that loved a movie and, I mean, it's the greatest movie in the world and you're excited to go see it. And just by nature of your expectations being so high, it's really got to impress to meet those expectations.
Right.
And I think it is very true across human nature, and it certainly plays into to stocks and earnings expectations as well. So you make a solid point that Apple, Tesla, and Google are still well-run, good companies.
Oh my gosh, they're the best, some of the best companies in the world.
And
but
yet,
if the expectations are elevated, and they just slightly don't defy gravity yet again,
bingo,
and their stocks roll over.
That's it.
Okay, which gets us back to this chart yet again that we opened with. The S&P 600, from an earnings perspective, in the last 13 months, have fared better than their larger brethren.
That's right. So these are smaller and mid-sized companies, just to explain what that is looking at. And to your point, across all 600 of those names, they've done better than their bigger brethren.
All right, so how do small cap companies compare to the big cap stocks? Well, we know on a net income basis they're slightly down, but I mean, here's a chart comparing the two, the NASDAQ to the Russell 2000. And what you can see is that back in, and again, I mean, we're not trying to make .com comparisons and the world's going to end, but I mean, it's true. Those big cap stocks are more expensive than small cap stocks, which either means the big cap stocks are too expensive, which I'm not going to argue at all. Or, I mean, it is what it is. Or small caps are just really cheap.
They got maybe some room to run. I mean, it would seem that way. That's right.
Yeah. So next chart. So here's a chart, and I think this is pretty cool. This is a chart looking back through history at how the Russell 2000, those small cap stocks, really act when the S&P starts back up. And so often they kind of start up in lockstep, right? Mm-hmm. But there have been time periods where there haven't, like October 31st of 1990. The spread between the S&P 500 and small caps was 17%. And by October of 1991, you had small caps back to all-time highs. I mean, they move pretty quick.
They can. That's exactly right. And I think that that's what this is getting at is at the, this is a very updated chart. The spread right now with the S&P.
This is through February 5th.
Okay,
yeah.
So
yesterday.
Just off the highs for the S&P 500, and the small cap index is still 20% plus behind that.
Yeah,
right?
That's right, which is still a bear market for small cap stocks.
It's wild.
So Charlie Bolello pointed out some times when you've got these kind of disparities, and the punchline is, look, usually the Russell 2000 took off.
It doesn't mean that the big boys don't do well either, but he says, generally in these really stretched situations, the Russell 2000 does a pretty good job of playing catch up in a pretty quick manner.
Yeah, and in each of those cases, I mean, there definitely wasn't a recession going on, and I don't believe in any of those cases the yield curve was inverted, as it has been now for like 15 months. So here's a chart of the Russell 2000 over the last 2 years, and yet again, I mean, we
similar to looking at the equal weight, that is just off its highs, or 4 or 5% off its highs. Russell is well off its highs right now, 20% we just saw, and so and yet they have had better net income numbers than the S&P 500. So it feels like we're looking for the opportunity that maybe this is an opportunistic place to be at some point in the year.
At some point in the year, in fact, Tom Lee from FundStrat put small caps as one of his top picks. So I'm eager to see kind of how it plays out. Next chart. This is from Helene Meisler, who pointed to our friends at Bespoke Investment Group. When the Russell 2000 starts the year with a decline of at least 4%, its median performance for the remainder of the year was a gain of 26%, with increases 6 out of 7 times. And that's when excluding 2008. So kind of interesting. And where is the Russell 2000 year to date? Through this morning, down about 3.25% year to date.
Yesterday it was closer to that 4% threshold. I guess intraday it had been there, and I guess even back to January it was there. Middle of January it was below that 4%. So she's got some data to support this idea that maybe there's opportunity there as well. So. Well,
we keep thinking there's going to be some sort of mean reversion at some point, right? Like the other companies are going to participate, and at some point, they probably will, but and including small caps, right? I mean, assuming we don't have a recession, usually small caps are early cycle, meaning after you've had a recession, that's the time to own small caps. Mm-hmm. We didn't have a recession last year. So, that's the big question. When is it right? But I mean, there's a lot of disparity out there.
There sure is.
So stay tuned. We'll, I'm sure, say more about small caps as the year goes. But you got anything else? What you watching?
I'm curious as to your Super Bowl pick, if you've got one. I think that the Niners are giving up 2 points to the Chiefs. You got odds on that?
The Swifts, baby. Kansas City Swifts. Yeah, she was a little odd on the Grammys the other night.
Oh, really? Okay.
I don't know if she was embarrassed for all the press she's gotten this year or what, but she was a little bit just different.
I think that the Chiefs get it as well. So I guess we don't need to put a wager down for the next episode. But either way, that's been on my mind. We've watched Alexander: The Making of a God documentary on Netflix, and it's intriguing. Very intriguing.
I want to see Napoleon. I still haven't seen Oppenheimer.
Yep.
And of course, I'm getting True Detective in weekly doses.
Yeah, I think
that's about. I'm gonna tell you, that's about enough, because this is as close as I felt to watching a suspense thriller in a long time.
Yeah.
Season 1 of True Detective was epic, and this is scarier than that. Yeah. So, awesome. Anyway, good stuff.
Yeah. Well, everybody, thank you again for watching. We certainly enjoy you all tuning in, and share with a friend, hit subscribe, hit the like button, send us a comment, any of the above, all of the above. We look forward to seeing you next week. Thanks.